First one, we're going to react to Tom Lee that went on CNBC here a bit ago and spoke about stocks valuations, where he sees a market going from here. Does he see us topping out here and maybe having a little bit of a downtrend? He'll also speak about Bitcoin. All right, guys, let's get into this.
Co-founder and a CNBC contributor. Tom, it's good to see you. We've had recently, I don't know what you'd call it with technology, but at least some of the bloom has come off the rose on the Magnificent Seven, or at least a couple of them, and on technology in general, although the NASDAQ has recently hit some new highs. Do you see any trouble there, or at least a moderation of the gains from recent years?
Well, I think it's understandable that technology could be consolidating some of the gains, because the gains since October have been prodigious. I think it's been healthy because small caps, industrials, other sectors have started to lead. So I think it's a sign that the market is broadening. So I don't think technology valuations are at a bubble. I actually just think it's been healthy.
Really? So that is the half empty, half full viewpoint that either one that we've actually had people express earlier. Either, the generals could come back down to the soldiers or they could broaden out. And the advance could...
Well, if you're going to talk about bubble, where's the bubble at? Okay, these guys talk about Mag 7 all the dang time. Apple, Google, Meta, Nvidia, Tesla, Amazon, right? Okay, where's the bubble? Amazon actually trades at a low forward P compared to its historical norm, right? Apple, you could say maybe a little rich, but now that the valuations come down, it's not nearly as rich as it was. Google actually is trading cheap based upon, if you look at where that forward P usually trades at versus where it's at now, very cheap. Nvidia stock, even after this big run, extremely cheap compared to the growth rates the company has. Actually, it's amazing that stock has such a low forward P considering the growth rate. If all growth dies for Nvidia and they don't grow anymore in the future, then you could say, okay, it's a high valuation. But as long as Nvidia just puts up somewhat decent growth in the future, that one's extremely undervalued. Meta's trading ridiculously undervalued right now. Tesla stock is in a horrible place. So, the Mag 7, they talk about all the time, and then they want to try to say bubble, but where's the bubble at? Like, where's the bubble at? How are you going to say Apple or Google's in a bubble? How are you going to say Meta's in a bubble? And how are you even going to say Nvidia's in a bubble when you look at that stock and where the growth rates are at? And then you got Amazon trading cheap, and you got Tesla stock that can't do flip and flapjack in anything for years now, right? Where's the bubble? That's the hard. Yeah, just when you think logically about it, it's really hard to prove a bubble when you just don't have much to go off of in terms of facts.
Yeah, so do you think that this election year, 2024, will gains be similar to 2023, or was that was pretty rare and unlikely to be repeated this year?
It's a question clients are asking us. The stock market seems a lot stronger this year than last year. We've had 4 consecutive months of gains, which Mark Newton, our head of technical strategy, says is very rare. We already had a pretty nice January, a very strong February. To me, if the market gains 20% this year, which would match what it did in 2023, it wouldn't surprise me. But I think the character would be very different, that it would be a lot more sectors participating in. In some ways, I think if we are up 20% this year, I think small caps could be up a lot more, as much as 50%.
So we're not going to have a down year.
Okay, there we go, baby. Mr. Tom Lee coming back out with his 50% call for small caps. Oh, man, I'm just hoping he's right about that, because I got a lot of small caps that, man, those stocks need some help. And I'm telling you, there's several of them that come to mind, 2 off the top of my head, Honest and Fubo. I mean, if small caps all of a sudden roll 50% in the next 9 months, I mean, you know what's going to happen with stocks like Honest and Fubo? Oh my gosh, the moves up is going to be beyond ridiculous. So I'm just sitting there like, whoo, I hope he's correct.
That you're taking off the table, or what is it that would have to happen to throw this, you're somewhat bullish or pretty bullish?
Something I liked earlier, I was watching Fast Money, and one of the guys, you know what he said? He said this. He said about small caps. He said, who cares about small caps? We give them too much attention. I love that commentary. I love that sort of commentary when people are saying, who cares about that? No one cares about those sorts of stocks. I mean, that's pretty bottomish activity when people go and say something like that in regards to an asset class, right? Who cares about that? We give them too much attention. Like, okay, really?
Cast in jeopardy. What would have to happen?
I think two things would probably derail an equity move of 20% this year. Something even pushing the markets down. One would be if inflation reasserts itself in a way that the Fed has to reverse its action 100%. And become quite hawkish again. I think that would terrify markets. The second is if monetary policy is so restrictive now that we slip into a recession. I don't think we're losing that much economic momentum, but either would be negative for stocks.
Yep. Perfectly fair.
And so it broadens out. You have a feel for interest rates. Is that how important is that to you? Because we got a jobs number tomorrow that could move rates and the prospects for cuts later this year. You probably would be more bullish if you could say we're going to have 4 cuts this year, wouldn't you?
Yes. I mean, to me, more cuts would be easier for markets to sort of feel comfortable because it would also have, as you're pointing out, downward pressure on interest rates. I've been pretty surprised that interest rates have moved up this year and the stock market has been able to sort of look past that because I think they're viewing it as rates are rising for the right reasons. But yeah, a better scenario is, of course, inflation's falling visibly enough for the Fed to begin cutting with confidence.
When Bitcoin was 4,000, it came down from 20,000, and you used to come on and say, "Yeah, by the end of the year, it's going back to 20,000." I don't know how you feel confident doing those things. Now you've done it again, really, and with I don't know, what did you say by the end of next year? Where could it be in your view?
Well, I think that sometime in the next 12, 18 months, Bitcoin can be over 150,000. But that's because, the backdrop for Bitcoin is so much more favorable today. We've got more visible demand from the spot ETF, and we know the supply dynamic is improving with the halving coming up, which is less than a month away. It does help that the Fed is becoming dovish. I mean, that's easier monetary policy. And I think from a regulatory perspective, we had so many hammers dropped in the last 12 months, really 18 months, that unless it's going to be worse over the next 2 years, Bitcoin's already faced sort of the peak of regulatory backlash.
And it got through the old highs.
Yeah, so, and I can always speak about Bitcoin as a kind of an impartial individual, since especially nowadays all my Bitcoin got jacked when all the, the crypto companies obviously went down in 2022, unfortunately. But, I can just speak with an impartial view on this, right? As somebody that's, always kind of watched it. Usually when Bitcoin's going through one of these big bull cycles, it busts through a new all-time high. It busts through whatever the old all-time high was and then breaks out and then puts up some sort of new crazy number. And it, then, the euphoria reaches max level. Then we have, a short-term drop, some comeback from that, but you don't get back to the old new highs, and then a big downfall, right? It feels like as far as this bull run, we're still on we still got to bust through new highs, and then we're going to set some new record, some number. I don't know where it is. Maybe it's 100K, maybe it's 150K, maybe it's 200K. There's going to be some new crazy bar set, a max level euphoria, where just everybody and their grandma wants to buy it, right? And then you'll have a short-term dip in it. There's going to be a little bit of a comeback, and then there's going to be a massive crash. And it's going to be a massive crash, as it always is. Is it going to be as big as the last ones that we've dealt with over the last, 5-10 years? I don't know. Is it more of a 50% crash, 40%, 80%? I don't know. We'll see. But it'll be a massive crash. We do know that, right? But we're still in the cycle of breaking through to some new epic number. Maybe it's 100K, 150, 200. We'll see. But that's kind of what's going on there, and that's just my impartial view on that situation.
We had a true Bitcoin bull on earlier saying that in previous instances where it has reached a new high, that it doubles fairly quickly after that.
That's fair.
I mean, he said 18 days. The minute it hit a new high, it sold off almost $10,000 to 59, but it's back to 67 today. How long before it doubles again? I mean, could you see that in the near term, another doubling?
Sure. Why not?
I mean, near term, it's hard to know near term. Joe, I know our digital strategist, Sean Farrell, said that it's typical to consolidate after making a new high. So he thinks for the next 9 or 10 days, we're going to be maybe chopping around here. But we saw it with the spot Bitcoin ETF inflows, like, BlackRock seeing almost 800 million in inflows. So I think as long as there's strong spot demand and there aren't eager sellers, you do have a market that's out of balance, that there's too much demand for Bitcoin, not enough supply created through the block reward.
Right. And as a measure of risk on, I guess the NASDAQ sometimes even tracks Bitcoin, doesn't it?
Oh, exactly. I mean, to put it very, very simply for everybody out there, if you are bullish on the NASDAQ for the next 9 months, you're bullish on Bitcoin for the next 9 months. It just doesn't make any sense, not to be, you don't have to play it, but you just have to be honest. Like, if NASDAQ's going up over the next 9 months, Bitcoin's going up over the next 9 months. If you're bearish and you're like, NASDAQ's going to go down 10, 20% over the next 9 months, okay. Bitcoin's going down huge. Like, it's as simple as that. You're bullish, Bitcoin's going up. You're bearish, Bitcoin's going down. And just your opinion has to formulate really around the stock market and the NASDAQ stock specifically.
Yes. It's a study we did several years ago showed that the best years for Bitcoin occurred when the S&P and the NASDAQ had their best years. So I think it does sort of confirm the idea that Bitcoin is a risk-on asset today. So as long as Bitcoin does well, it's actually bullish for stocks.
Did you notice the other day the Wall Street Journal, in the headline, it was describing the move in Bitcoin, and it said a new high for the currency. I had never seen that in the Wall Street Journal before. Usually, I don't know what you call it. I still don't know what to call it really. But front page, it said currency. Is it a currency?
Yeah, I mean that's it. I missed that. That's a great term. It's certainly better than someone calling it sardine cans or tulip bubbles. But to me, it's
hey Tom. So
and before we go further here, I mean, usually you're at the end of the cycle in regards to the Bitcoin run or even a NASDAQ run. Usually you're at the end of the cycle after altcoins have made their big move and small cap stocks have made their big move. After that, in speculative stocks, after all those things have made their big move, then you're at the end of the cycle and it's downward from there. But until you get to that last stage of like, oh man, once everybody starts talking about who cares about Bitcoin, that's little money getting the altcoins, then okay, we're getting toward the end, right? And once everybody's kind of like, who cares about Meta stock? Who cares about Nvidia? We need to be in this speculative stock or this one over here. Once you've reached that point in the cycle, the downward move's coming. Then you're in a tick, tick, tick situation and it's coming very soon. So we're not there yet. We still need small caps to go on a big run. We still need, everybody to get all crazy about altcoins. So until that happens, you can't really call top on the cycle, until that happens. And who knows, 6 months from now, 9 months from now, 12 months from now, it could be a very, very different situation.
Just to put a fine point on this issue about the correlation with the markets, and how do so if you're saying it's correlated to the markets, and we have a market that's doing quite well, and as we said, it appears the economy is doing quite well. The idea that it would do very well in a bad economy, which is what a lot of people have been trying to suggest.
This is baloney.
I think on this broadcast earlier today. Is that right or wrong?
That's clownery. It's wrong.
I think Bitcoin is a hedge against unsound money. And that's why when Joe, talked about it as a currency, that's how many people do view it because, Bitcoin has its own unit value and it's measured against dollars. And I think it's the same way people measure gold against dollars. So I think if there is an event, and we've seen it in Turkey or Venezuela, that when those currencies collapse, Bitcoin has been a way for people to preserve wealth. So I don't want to see that test sort of put in the U.S., but I think that's one reason people own Bitcoin.
Yeah, but at the end of the day, here's the bottom line. NASDAQ goes down massively. S&P 500 goes down massively. Bitcoin goes down epically. Fact. Alrighty, guys, let's go ahead and get into this.
May be a little bit disconcerting for some. Is the leadership still intact, though, for the markets overall?
Dom, I think it's a good question because the market is extended and it is a mature rally. We're going to be entering our 20th week next week, but I think we should be giving the stock market the benefit of the doubt. So today, stocks are wobbling. Not a surprise that there is some profit taking. We did actually have a good jobs number, so I'm probably saying one eyebrow is raised because we're selling off on good news. But with margin debt where it is, and I think the earnings backdrop being so strong and the Fed confirming that they're leaning towards cuts this year, I think the backdrop, as you noted earlier, is still very good for equities.
What exactly is going to drive that? We've talked about this idea. It could be underlying earnings growth. It might be the idea of people paying more for that dollar of earnings expected, multiple expansions, so to speak. What's the big tailwind that you see coming up for the markets overall?
It's really all three. I think there is upside to earnings. Earnings beat by 7% in the first quarter, so you're already one quarter in. If consensus is 245, well, that means there could be $10, $15 of upside for just this year on earnings alone. On risk premia, which is what you should put as a PE multiple, well, if the Fed starts cutting and the economy's resilient, the PE is only 15 times ex-FANG. And the third is really flows. There's still $6 trillion of cash on the sidelines. Margin debt is barely budged. It's below where it was in October 2023, which was just a few months ago. So I don't think investors are necessarily that risk on. I mean, I know the market is...
Okay, what he just said there, very, very important. Very important. And it's something that doesn't get talked about nearly enough. And I appreciate Tom Lee bringing that up. Margin debt. Margin debt being at, relatively low numbers compared to how big the market capitalization is of the stock market. You always want to look at where margin debt's at as a percent of the market cap of, you can look at the S&P 500 or the NASDAQ or the stock market in general. That's how you always want to judge it. Because over time, margin debt levels should be a bigger and bigger number as the market gets bigger and bigger, right? But as a percent, you want it to not be something crazy. And that's where we're at right now. We're at very healthy levels, which, if people are taking out a lot of margin to buy stocks, that means you're on an ultra risk on market. People are just thinking about the upside. They're thinking about, I don't just want to own 1,000 shares of NVIDIA. I want to own 1,000 plus another 1,000 of money I don't even have, but it's on margin just because I think it's going up, right? We're obviously not in that sort of market factually, and so that's good news.
Overbought, but Mark Newton, our head of technical strategy, says you don't really want to be, using an overbought as actually a sell signal because strong markets stay strong.
Tom, you mentioned the idea that leverage isn't what it used to be at points in the past. Does that take a massive market decline off the table? And if we did get a decline, how big in your mind could it be?
For now, I think it does mitigate downside because when leverage is low, like margin debt at the NYSE, it means investors aren't long, yet the backdrop is improving, so that means they have to use these pullbacks as chances to get long. But at the same time, we expect an air pocket in the first half, something like 7% or more. It's just that there's so many top callers now that I think that's why there's still gas in the tank on this rally.
All right, and last question. We have a few moments.
Like
the favorite part of the market for you, given the current valuation?
Well, there's what I think are 5 things that are working this year. I don't really want to talk about all 5, but to me, we know that technology and FANG, including NVIDIA, are working because of AI. And I think that's also pulling up, the miners and Bitcoin because they are kind of correlated trades. The second thing that seems to be working are things that are related around Ozempic and reducing weight loss because of the productivity benefit to workers. But to me, the third, maybe most interesting, is small caps. We think there's 50% upside this year. They're trading at 44% of the price to book of large caps. So I do think that's really one of the sleeper stories this year.
Yeah, you can ask me, do I still have faith in small caps? And the answer is, do I still have faith in small caps? Yes, I do still have faith in small caps. But that being said, I don't have as much faith in small caps as Tom Lee does. He went into this year talking about 50 to 60% upside for small cap stocks, right? And that's a hard one for me to wrap my head around. I wish it was true, but yeah, that's a little bit of a wild call there. So I still have faith in smalls, but just not Tom Lee level faith in smalls. That's a whole different level there.